Hello, I'm Frank Kopfinger, Head of Investor Relations and Strategy at LEG. With our full year 2024 results, we provided the markets with a couple of highlights, which I'm going to address in this short video. First, we delivered in 2024 an 11% growth of our core KPI, the AFFO, the adjusted funds from operations, which is effectively our cash earnings after CapEx spend. So we increased it to 200.4 million euros. Second, with this, we are happy to propose a dividend of 2.70 euros to the upcoming AGM. Third, the results are backed on one hand by strong operational fundamentals and on the other hand, backed by a strong financial profile. And fourth, the integration of BCP, an acquisition which we just announced in November 2024, is well on track. And fifth, we confirmed our 2025 guidance, which suggests another 7% growth of our AFFO. And with this, let me now walk you through those highlights. In 2024, we achieved an AFFO, which is our cash-based earnings metrics, of 200.4 million euros. This represents an increase of 10.6% over 2023. It is based on strong operational KPIs, which are supported by the ongoing strong supply-demand imbalance in our markets, and especially in the affordable housing segment. Vacancy came further down to 2.3%. So effectively, we are fully booked out. We increased rents on a like-for-like basis by 3.4% to an average of €6.80 per square meter. With this, the average apartment with 64 square meter costs about €435 per month. The 3.4% rent increase on a portfolio basis is driven by 4.0% rent increase for our free finance part of the portfolio. This represents roughly 80% of the portfolio. And the 4.0% rent growth much better shows the underlying momentum. And we expect for 2025 that the free finance rents will grow by even more than 4%. The subsidized units, which represent roughly 20% of the portfolio, have not been increased in 2024. They will only be increased every 3 years, and the next time will be in 2026, when also the subsidized rents will contribute to the overall portfolio rent growth. On valuations, we saw a slight uptick in valuations in H2 2024. And with this, the stabilization of the valuations. Values rose by plus 0.4% in the second half of 2024, after being down by 1.6% in the first half. This leads to a valuation effect of minus 1.2% for the full year. And just as a reminder, from the valuation peak in H1 2022 to year-end 2024, we brought down the valuations in total by almost 17% by the entire portfolio. With this, the value per square meter for our total portfolio amounts to roughly €1,630. The gross yield of our total portfolio amounts now to almost 5%, i.e. 4.9%, and the net initial yield stands at around 3.8%. We will provide an outlook on our H1 2025 valuation together with our Q1 figures in May. Let me now walk you through one of the more important points which we currently discussed with investors, which is our progress on disposals. At this end, we made further progress towards year end. The market recovery certainly also benefited our disposal program. In 2024, we disposed roughly 2,500 non-core units, half of which in Q4 2024. This translates into annual gross proceeds of 255 million euros or net proceeds of 180 million euros. The term net proceeds refers to disposal price after ancillary costs, but also after paying down any underlying debt financing. On top of this, there are roughly 1,800 non-core units, which are already signed as of today, but which have not yet been transferred until the year end 2024. Most of those units, i.e. around 1,000 units, will be transferred already in Q1. With this, we will make a strong start into 2025 with 150 million euro of proceeds to be accounted for already. We have currently another 3,000 units for disposal. The focus, like with all our disposals, is on the portfolio management, i.e. they help us to sell non-core assets, be it either in remote locations, be it also having a high capex requirement in the future, or where the number of assets is simply too small for a certain location. And with this, let me now walk you through our progress which we made on the BCP acquisition. As of today, we are the proud owner of 88.2% of BCP after increasing our shareholding by 52.7% at the beginning of the year. In our integration work, we currently focus on the setup of the tax structures. And as soon as those are in place, we will go ahead with the tender offer for the outstanding shares. The operational integration, not being dependent on the tender offer, started already from day one, i.e. in early January. By now, the BCP portfolio is fully integrated into our systems. The management follows LEG standards and processes. We were able to benefit from our experiences of onboarding bigger portfolios to our platform, so we are happy to report a seamless integration into our operating platform. At the same time, we made excellent progress in refinancing BCP's financial liabilities. As you might have seen, we were able to pay back the shekel-denominated bonds, which BCP issued in the Israeli market. Additionally, we were able to repay expensive secured financing, totaling total repayments of more than 350 million euros. As shared with you already in November last year, BCP will not yet be a contributor to our AFFO in 2025. We continue to expect a neutral effect to AFFO, as a higher capex requirement will offset the underlying FFO1 contribution. And with this, let me come to the ESG update and the update on our green ventures. Together with our financials, we also provided market with an update on our decarbonization path. We reduced our CO2 footprint by 26% since 2019, when we started our ESG journey. With the update on our path, we slightly reduce our 2030 target, as we are well on track and we confirm our ambition to reach climate neutrality by 2045. All our efforts are based on emission efficiency instead of energy efficiency. This means that we purely focus on the CO2 footprint, where we see opportunities to improve it via low-cost measures. And with this comes also our ambition to generate earnings via our green ventures. Here we position ourselves as solution provider in the area of serial modernization via Renovate, smart thermostats via Thermios, and air-to-air heat pumps via Decarbo. We expect to have an earnings contribution of 20 million euros on a cumulative basis until 2028 from our green ventures. And with this, I come to the financial profile. We believe we are well positioned, especially in this current environment where we saw sharp rising yields on the bond markets. In total, we issued 900 million euros at the end of the year already via a 700 million convertible and 200 million bond with low coupons. Additionally, we issued a 300 million bond at 3.875%. So we issued in total 1.2 billion of bonds just before the last recent hike in interest rates. This significantly helps us to improve our financial profile. As of the end of 2024, our average cash interest costs did even decline to a low basis of 1.49%. At the same time, we have around 900 million euros of liquidity on our balance sheet. 2/3 of this are held via short-term monetary deposits where we still earn interest income. So we made use of this liquidity to pay for the BCP shares at the beginning of the year, to refinance already part of the BCP financial debt, which I just explained, and we will pay down the 2025 maturity. All our remaining 2025 maturities are therefore covered. This puts us in a very comfortable position to opportunistically refinance or repay some of the 2026 debt. Also, when it comes to our debt KPIs, our ICR ratio stands strong in sector context at 4.3 times. LTV with 47.9% remains above our midterm target of 45%. We are working on it via disposals as well as our AFFO steering. And then finally, let me walk you through our guidance for 2025. We confirmed our 2025 guidance, which we presented already with our Q3 2024 results. We expect for 2025 the AFFO to further grow to a range of 205 to 225 million euros. This represents another increase of more than 7% if you simply take the midpoint of the 2025 guidance range. As a reminder, this comes on top of the 11% AFFO growth, which we just did for 2024. Key driver are another strong rental growth, where we expect a growth of 3.4 to 3.6%. This reflects the underlying market dynamics on the back of this massive undersupply in the market, while demand remains strong, especially in the segment for the affordable housing, which we occupy with an average rent of €6.80. We are also going to further grow our investments by at least another euro per square meter, i.e. we increase it to more than 35 euro per square meter. And with this, I come to the end of the video. I hope it gave you a good overview on our 2024 results. You certainly find the entire reporting set on our webpage within the IR section. Should you have any questions, then please do not hesitate and reach out to me or the entire IR team. And with this, I thank you and goodbye.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.